Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about EASTGROUP Properties INC quarterly report. EASTGROUP Properties Inc. provides a range of businesses and services focused on industrial properties in high-growth markets across the United States. Specifically, the company offers development of industrial properties, acquisition of existing industrial properties, operation of industrial properties, provision of functional, flexible, and quality business distribution space for location-sensitive customers' ownership of premier distribution facilities near major transportation features. These services are concentrated in key states including Texas, Florida, California, Arizona, and North Carolina. EASTGROUP Properties Inc. S stock price has increased by 6.7% in the most recent quarter and 12.6% year-to-date due to several positive factors. The company's strong earnings reports have been a significant contributor, with adjusted earnings exceeding analyst expectations in each of the past 4 quarters. Revenue growth has also been impressive, with an 11.8% increase in the third quarter of 2025. In addition to its financial performance, EASTGROUP Properties has increased its dividend payments by 10.2% and then another 10.7%, demonstrating a commitment to returning value to shareholders. The company's acquisition and development activity has also been active, with several significant purchases made in 2024 and 2025. Furthermore, the company's operational metrics have remained strong, with historically high leasing volumes and occupancy rates. Management has expressed optimism for 2025, citing a strong balance sheet and benefits from long-term secular trends such as population migration and e-commerce growth. Overall, EASTGROUP Properties' solid financial performance, dividend increases, and active investment strategy have contributed to its stock price increase in the past year. The primary drivers of revenue growth or decline can be summarized into 4 key areas. Firstly, a significant increase in average rental rates has contributed to revenue growth, with a 42.1% rise in new and renewal leases. Secondly, acquisitions have played a substantial role, resulting in increased property net operating income, PNOI, due to the addition of new properties. Thirdly, same property operations have also seen an increase, reflecting improved performance from existing assets. Lastly, revenue growth has been boosted by newly developed and value-add properties, as well as straight-lining of rent, which adjusts for inconsistent rental income patterns. Net income and profit margins experienced significant changes from 2024 to 2025. Net income increased by $11,763,000, representing a 21.3% rise. This growth was accompanied by a substantial increase in profit margins, which rose by 17.6 percentage points or 38.8%. The reasons behind these changes are multifaceted and include an increase in property net operating income, PNOI, due to same property operations, acquisitions, and new developments. Additionally, a decrease in interest expense contributed positively to the growth. However, this was partially offset by an increase in general and administrative expenses. The company's financial performance indicates a strong ability to generate cash from its core operations, with net cash provided by operating activities totaling $415,986,000 for the 9-month period ending September 30, 2025. It is clear that the business is generating sufficient funds to cover its expenses and invest in growth initiatives. This positive operating cash flow is a key indicator of financial health, suggesting that the company's operations are profitable and sustainable. The company's debt level and interest expenses have undergone significant changes. Notably, unsecured bank credit facilities have increased by $45.8 million during the 9 months ended September 30, 2025, with an outstanding balance of $45 million as of that date. Conversely, unsecured debt has decreased by $69.5 million over the same period. Interest expenses have also seen a substantial decrease, dropping by 22.1% from 2024 to 2025, and totaling $1.7 million less for the 3 months ended September 30, 2025. The company's interest rate swaps are expected to further reduce interest expense by an estimated $7 million over the next 12 months. These changes suggest a shift in the company's financial strategy, with increased borrowing and reduced interest expenses. Management is optimistic about the company's outlook, citing several key points. The primary source of revenue, rental income, has increased by 3.2% year-over-year, with average rental rates for new and renewal leases rising by 42.1%. To mitigate risks associated with development, the company aims to hold a maximum level of land for development and adjust start dates based on leasing activity. The company's strategy is focused on same property operations, acquisitions, and newly developed and value-add properties. Financial performance has been strong, with funds from operations, FFO, increasing by 6.6% and 7.3% for the 3 and 9 months ended September 30, 2025, respectively. Property net operating income, PNOI, also saw significant growth, rising by $15,384,000, 12.9%, and $45,608,000, 13.3%, for the same periods. Management is confident in the company's financial position, with compliance with all debt covenants. The company is actively managing its capital structure through an ATM program and forward equity sale agreements, demonstrating a proactive approach to maintaining a strong balance sheet. The company's financial summary highlights its acquisitions and divestitures. In terms of acquisitions, the company incurred losses in profit before non-operating income, PNOI from development and value-add properties, amounting to -$6,951 for 3 months and -$18,264 for 9 months in 2024 and 2025. Additionally, there were losses in PNOI from other acquisitions of -$8,116 for 3 months and -$22,135 for 9 months. On the other hand, the company's divestitures included selling 33,120 shares of common stock through its ATM program, issuing 1,449,078 shares of common stock for net proceeds of $258 million, and disposing of operating properties with minimal losses in PNOI. The company has a history of paying dividends to its shareholders. In fact, it has paid out $219,955,000 in dividends during the 9 months ended September 30, 2025. This payment was made in October 2025 for dividends that were declared in August 2025. Supply chain disruption looms large. A growing concern in the industry is the potential for supply chain disruption. This issue has been highlighted as a significant risk, with experts warning of its impact on business operations and overall performance. The threat of inventory buildup is also present, further exacerbating the problem. That concludes the financial summary for EASTGROUP Properties Inc. Feel free to comment below, and I will be happy to answer them when possible.